Hello and welcome to IBA's helicopter market update. My name's Owen Geach. I'm Chief Commercial Officer at IBA, and for the last few years I've played an ever-increasing role in our helicopter commercial activities. I'd like to spend the next few minutes talking through a quick historical snapshot, our take on the current market and some of our thoughts going forward. The last 12 months, as you'll see from the first slide, have been quite dramatic for the helicopter industry. We've had the Waypoint Chapter 11 and bankruptcy proceedings and a subsequent sale of that business to Macquarie and a breakup of that business unit. We've seen various other Chapter 11 occurrences with PHI, albeit likely to emerge, being placed in Chapter 11. Bristow Helicopters followed, and that was after a restatement of their annual accounts. We also saw Breakslave Helicopters enter Chapter 11, and the whole offshore market has been painful, especially among the S92 and EC225 helicopter variants. Most recently, in the last few days, we've read that Sikorsky are suing Babcock for the non-delivery of a further 2 S92 helis, which will undoubtedly bring pressure to bear on that sector. And at some operators, we've seen board level shuffles. So quite a volatile last 12 months. If we go to the next slide, if we take an overview of the world helicopter fleet, there are somewhere in the region of 32,000 helicopters in service around the world, excluding those that are parked or yet to be delivered. Of these 32,000 helicopters in use, 2/3 are turbine, and the majority are in commercial or parapublic use. A helicopter has a strong economic life compared to that of a commercial passenger aircraft, typically between 30 and 40 years. And people ask why. Many are mission critical. A helicopter is a non-pressurized vehicle, and it can be overhauled back to nearly new status. So after, say, 20 years, you might find that all of the key components have been changed, and that can keep on going. It's not unusual to hear of helicopters in service that are even 50 years old. The OEMs are capable of keeping supply in line with demand. So unlike commercial aviation, we don't see large backlogs. Often helicopters are ordered based on needs, and this assists with value retention. It's also worth mentioning that upgrades and retrofittable options do keep a helicopter up to date, and these are available for as long as it's economically feasible or viable for the owner-operator to do this. Reconfiguration can be relatively easy and quick. It's even possible to go from an offshore to a VIP, and in many cases this is with little downtime. Expense can vary depending on the final fit-out required, but that does mean that there is flexibility across helicopter types to carry out a range of missions and in different locations. If we turn to the next slide, I thought it'd be useful to point out the weighting between owned and leased. Whereas with commercial aviation, commercial aircraft, the split is roughly 50%. In the helicopter sector, the vast majority are financed or owned as opposed to on lease. So in fact, only 7% of the world fleet of turbine helicopters are currently on lease. For the light single market, and a similar pattern follows right the way through, albeit up to heavy, where a higher percentage prevails. That does therefore present opportunities for investors, lessors and financiers to explore other means of financing and leasing helicopters other than outright sale to the operator. If we turn to the next slide, we're looking at helicopter popularity. Winners and losers. We've already touched on the offshore EC225 S92 market being troubled. However, types in the medium category, such as the AW139, 169, H130 family, and the Bell 407 are among the most popular types. And in terms of transitioning between operators and ease of remarketing at lease end terms, have proved to be relatively straightforward with short downtimes. It's interesting to note also that older out of production types in certain environments, particularly in Africa or Australia, for example, and the Far East, such as the Bell 206 and MD 500, are still in demand and still delivering good value as a working asset. Looking now at the overall OEM market share, firstly by numbers of helicopters and secondly by asset value. As at the end of 2018, Airbus helicopters and Bell enjoyed effectively 2/3 to 3/4 of the overall market share globally, and a similar percentage, slightly less, by value, leaving Leonardo Sikorsky and others in the minority shareholding. And we expect that trend to continue for the foreseeable future. Looking now at actual deliveries and forecast deliveries for that matter, interesting to note that the trend is upward despite the doldrums of the past couple of years. So our 2019 to 23 forecast shows a gentle but nonetheless upward increase in our forecast, IBA's forecast for actual deliveries. We don't expect to see significant cancellations, and we are reasonably confident with that prediction. Financing helicopters has been, as we've discussed, quite a challenge. The Waypoint bankruptcy, at the time and around that time, probably 12 months ago, there might have been 26 odd lending banks and financial institutions. The Waypoint bankruptcy was a little bit of a wake-up call, and debt is now a challenge for many operators looking for financing. With out of those 26 that participated in Waypoint financing, probably only 5 or 6 still have a real lending appetite and may only consider existing relationships as opposed to new ones. Many of the banks at the time were more syndicated secure lenders, whereas now IBA's view is that we're likely to see more direct lending. There are some new financiers emerging. CaixaBank and CIT have been a player for a while, mind you, have recently provided financing and investment to LCI. Clydesdale Yorkshire Bank in the UK is returning to this sector, albeit that won't be for offshore, that will be primarily for air ambulance and domestic financings. And in terms of new lessors, we've seen Thora Capital in the US emerging. It's completed its first deal and has several in the pipeline. So in conclusion, IBA's view is that we've probably seen the bottom of the cycle. Certainly the non-offshore helicopter market has seen the bottom of the cycle. There is evidence of recovery, with new contracts being won by the main oil and gas operators. We've already said that we're forecasting low levels of growth, but nonetheless growth all the same. The market's going to remain a challenging environment for the foreseeable future, and that's driven in part by the volatility and uncertainty around oil price, political considerations, volatility particularly in the recovery markets, by which I mean Asia, Latin America, Middle East and Africa. There's still some uncertainty over the future of major helicopter lessors and operators, although we do expect PHI to emerge from Chapter 11 soon, and Bristow's this week announced a cash tender offer for $75 million worth of secure notes. It's an important step in their potential exit from Chapter 11. There is still a persistence of oversupply across some sectors, particularly, as we've already mentioned, in the heavy sector. The S92, S76 and EC225 are becoming available in growing numbers. And there's a shifting pattern of demand for newer and smaller rotorcraft, particularly those that can do the job of an S92 in the oil fields and at a lower block hour rate. And lastly, in terms of overall confidence amongst lenders, we do believe there's still some lag between actual recovery and subsequent recovery in the confidence amongst lenders. I hope you found this short overview of interest. If you do have any questions, by all means drop me an email at owen.geach@iba.aero. In addition to that, if you go to our website, www.iba.aero, there are a number of papers, articles and presentations which we believe will also be of interest.